The next decision-making exercise is keeping or replacing equipment. Okay, also we want to identify the relevant information when we determine if we replace the old equipment or we just purchase the new equipment. The point is, again, we should compare only the relevant information about the future cost of older equipment and the future cost of the new equipment. The sunk cost, the old costs are not the relevant now. For example, the book value of old equipment is irrelevant. That is sunk cost. So the depreciation of old equipment is also irrelevant. When you get the book value of old equipment, how to get it? Right, the original cost of the book value minus the accumulated depreciation. So the book value is irrelevant and the depreciation also irrelevant. But the cost of new equipment is relevant. That is the expected future cash outflow. So it is relevant. If we take annual this depreciation cost instead of the acquisition cost, when we compare the annual cost, then the depreciation of this new equipment is relevant information. Disposal value of old equipment is relevant because it is based on our decision. So expected future inflow. And gain or loss on disposal is irrelevant because it is also based on the difference between the book value, irrelevant information, and the disposal value, even though it is the relevant, because we already considered the disposal value of the equipment. So the gain or loss is not irrelevant. That is redundant. So let's take this example. 6 years ago, your company purchased a 10,000 machine with a 10-year lifespan that has depreciation of 1,000 per year. Now you are considering replacing the old machine with new machine as following information. Should you keep or replace the machine? Okay, we have cost information of old and replace new machine. The older cost is 10,000. That is the sunk cost, the irrelevant information. And the replacement machine is 8,000. And useful life in years, 10 years, and that is 4 years. And current age now 4 years past the 6 year is the current age in years, and useful life the remaining in years. Oh, sorry, that 4 years is the remaining useful life, and then 6 years the company has been using. And then accumulated depreciation $6,000 because 10,000 divided by 10 times 6, and then accumulated depreciation is 6,000. Okay, and then the book value is calculated by 10,000 minus 6,000. Then disposal value of old machine is 2,500, which is a given number, and disposal value in 4 years. We don't have this disposal value in 4 years. That means that there's no residual value of this old machine when you sell when you dispose this old machine in a full year of this useful life. Annual cash operation cost, maintenance cost, power cost, or repair cost is $5,000. And then replacement information, which is given information, and then book value not acquired yet, and disposal value not acquired yet, and then expected annual cash operating cost is 3,000. Okay, then let's collect only the relevant incremental cost information of cash operating cost. And what about older machine? That is the older machine book value, that is sunk cost. And then disposal value of older machine, right? That is the relevant. And the new machine acquisition cost, I think that is irrelevant. That is distractor, right? And the new machine acquisition cost is relevant to here somewhere. and total incremental relevant cost we will identify. So let's go. Here, cost, cash, the operating cost in the future when we keep, how much is gonna be the future cost in operating? We have 5,000 per year. Now how many years is it remaining? Right, 4 years times 5,000. So 20,000 is the cash operating cost. I'm gonna put the negative so that you can identify it is cost. And then what about the old machine? That is the sunk cost. It's forgone. We don't care because we only compare the future cost of new machine and old machine. And the disposal value of old machine. Do you put here? Who got the benefit when dispose this machine? Right, when we replace, then we get the disposal value of this old machine. So I'm gonna put the disposal value of old machine in here, replacement case, but not there. And then new machine acquisition cost. New machine acquisition cost, no, because we are going to keep. There's no cost information there. Here, the disposal value of old machine, we are going to keep. There's no value. And the old machine, that is sunk cost. So total incremental cost is just, you can sum up this total. So the total cost is the $20,000 if we keep this old machine. Now let's move on to the replacement. In the replacement, how much is the cash operating cost if we purchase this the new machine and run 4 years? Then right, so 30,000 3,000 times 4 years. So 12,000 is the cash operating cost in the future. Then old machine, that is the sunk cost. It's irrelevant. Disposal value of old machine. When we dispose this old machine, then the company get the benefit when they purchase this new machine. So that is 2,500, which is the benefit. Okay. Again, we do not put this 2,500 because we are going to keep. But when we replace, then that is the cash inflow by replacing. So that is the part of replacement, the benefit. The new machine acquisition cost, that is the relevant information. How much is the original cost of replacement cost, right? So it's 8,000, which is negative. Then let's sum up this total information, cost, benefit, and acquisition cost. Now the 17,500 is very, the useful incremental cost analysis. Very simply, we can identify which the options can the cost less or more. So you can find the replacement. Now incremental changes 2 minus 1. Then okay, 8,000 is the cost. We can reduce the cost. And then here we can also increase the benefit, but there is only the acquisition cost, $8,000 for the replacement. So just give me a second. Okay, so we can find the sum of this incremental part. When we replace, we get the 2,500, the more the income benefit. So replacement or keep, definitely we have to choose the replacement. Okay, that's it. See you in the next video clip. This is specified cost exercise. Bye bye.